This is your market update for Thursday, June 8th. I hope everybody's having a great day and a great week so far. So stock market this morning initially opening the day unchanged for the most part. However, then the initial jobless claims report for last week, which shows unemployment claims filed for the first time, came out and was significantly higher than what the market was anticipating. As a result, stocks rallied on that news because they're looking at it from a standpoint of, hey, this potentially could give the Federal Reserve reason to pause for longer on future rate hikes because the labor market appears to be cooling. This is another indicator that the labor market is continuing to cool, and that is something that the Federal Reserve, in addition to inflation numbers coming down, the Federal Reserve has been looking at the labor market very closely to see if it would cool at all, and it appears that that is in fact the case. The market is pretty much expecting or anticipating that at the next Fed meeting that the Federal Reserve is going to pause on rate hikes after 10 consecutive rate hikes. But it's what they do after that the market is really going to be looking at closely. So I think at this point in time, we need to give time to find out what the impact of the 500 basis points in rate hikes over the last 10 meetings, what that's going to do to the economy, because a lot of times there's a lagging impact of those rate hikes. So we'll wait and see what happens. Currently, the Dow is up 105 points, NASDAQ's up 130, and S&P 500 is up 21. Mortgage-backed securities also like that news because it's deflationary. They opened the day initially up 5 basis points, but again, when the unemployment claims information came out, rallied on the news, were up as much as 36 basis points at one point in time. Currently, last I looked a few moments ago, was up about 20 basis points. So today, certainly compared to yesterday, rate pricing is a little bit better. So speaking of interest rates, the Freddie Mac published survey for 30 and 15-year rates came out a short time ago. And after 3 weeks of rates going up, we have our first week where rates are actually coming back down, which is great. The 30-year fixed rate dropped by 0.08%, currently sitting at about 6.71% nationally. And the 15-year dropped by 0.11%, currently sitting at 6.0% nationally. So nice to see a week of declines after 3 weeks of increases. Hopefully that will roll over into next week as well. We will wait and see. Next week will be a lot more jam-packed full of information from an economic standpoint. So I hope that you all have a great afternoon, and I will see you tomorrow morning.